Hey everyone, Kevin here. So most of you know that I'm a real estate broker and a real estate investor. So real estate is not only my primary source of income, but it's also my primary investment, and it's also what I teach you on this channel and my courses linked below. I live and breathe real estate. So in this video, I'm gonna talk about the impact that the crisis has had on real estate thus far. That is, we're gonna look all the way up through March 27th. It took me a couple days to put together the data, so that's why we're talking about it here on the 29th. But beyond just showing you the data of what's been going on with prices and days on the market and the statistics so far, I want to talk to you about deals to look for, what I expect to come, what I see happening already. What about Airbnb? What about rentals? What about mortgages? What's happening? Like, are mortgages freezing up or credit lines getting pulled? There's a lot of crazy stuff happening, and we're gonna go through all of that, and then we'll finish this off by talking about whether or not I think there's going to be a foreclosure crisis coming to real estate. So let's get right into this one. Now, the easiest way to understand sales prices is just by looking at what happened in March of 2019 and what things are selling for in March of 2020 right now. And so we're gonna start with that, and then we're gonna see if we see an impact with the actual outbreak. By the way, just a heads up, sorry if I seem really hyper in this video. I was really excited by the data, and there's a lot of good information in this. Or maybe I was just really excited because I got my 2 free stocks with Webull using the link below for depositing $100. In the county of Ventura, from March 2019 to March 2020, real estate prices went up 3.51%. But remember, that does mean prices could have gone down between February and March. This is just to show you that the trend was positive, that prices were going up. Also, less properties sold year over year, and properties sold 23% faster in Ventura County. The same thing happened in Orange County, except slightly more properties sold, and their prices went up over 8% and sold almost twice as fast year over year. So the market was really blowing up in Orange County. And we saw a similar thing happen in Los Angeles, where prices went up 7% in 1 year. Properties also sold about twice as fast, and we saw substantially fewer sales in Los Angeles, which could sort of contribute to properties selling for more money. This is really, really good year over year data. This means from the beginning of 2019 to the beginning of 2020, real estate has been doing really well for people. And this is just straight up median sales prices. This is not considering like leverage or loans or anything. This is just straight up appreciation. Now, I'm not trying to be mean by doing this. I'm a stock market investor as well, but year over year from March 2019 to March today, the Dow is down 16.55%. So we can definitely see that so far there's a substantially different cycle between stocks and real estate. Real estate is up substantially year over year. But as they say, the devil is in the details. So even though the year over year data was really good, we want to zoom in to see what's actually happening between February and March, and also within March itself. So that's what we're gonna do now. Just a heads up, nobody else is processing this data yet, so you're hearing it here first, mostly because most companies wait until like April 15th to tell you what the March data is, because they wait for the month of March to end, and then it takes them like 15 days to put the data together and report it. I like to give you the information as it's happening so we can do information, make decisions fast. The extra 3 days in the month aren't gonna make a difference. All right, folks, this is absolutely insane. Look at this. From February 2020, the start of the crisis, to March 2020, Ventura up 2% in price, almost 3%. Orange County up 1.2%. LA up almost 5%. LA made almost 5% in property value from Feb 2020 to March 2020. Holy smokes! What? During the crisis, up almost 5%, with more properties sold and way fewer days on the market to get these properties sold. That's insane. Hennepin County up 3.59% between Feb 2020 and March 2020. Oh my gosh, what? Orlando up 1% from Feb 2020 to March, with days on the market down 30% almost, and still more properties selling and flying off the shelf. Absolutely incredible. Broward County, Florida up 5.5% month over month, with days on the market down as well and slightly more sales. Palm Beach region up 3.45%. Tampa region up 2.88%. Whoa! Oh my gosh, I have to say, like, I was absolutely shocked. I was legitimately expecting sales to go down from Feb to March. So year-over-year data is peachy. Feb to March data in 2020 is peachy. But what if we actually zoom in to the end of March? What starts happening? Now, the trend is not all good news. For example, if I zoom in and look at the entire period of March to just the last 2 weeks of March, we start seeing a little bit more shakiness. Ventura prices were matched. Orange County prices matched. LA saw a slight decline. Hennepin County went up a good chunk over that 2-week change period there. Orlando saw a little bit of a decline. Broward, a tiny bit of a decline. Palm Beach went up and Tampa stayed resilient. So we could see that when we look month over month, things are great. When we zoom in, we're starting to see a little bit of that shakiness happen at the end, but certainly not the kind of shakiness that originally you would expect. Now, there are a few reasons for this. Number one, prices might still be stable in March because a lot of people may have gone into escrow at the beginning, middle, or end of February, and those people might sort of be like, I'm already in a deal, I already paid the price. So these prices may not be 100% reflective of what's really happening at the end of March, even though the deals are closing at the end of March. That might be why we're seeing a little bit of that shakiness towards the end, because maybe deals are starting to cancel. In fact, if you read the LaTimes, you'll see dead deals, slashed prices. The issue drags down Southern California home sales. Deals are now falling out of escrow. Sellers are cutting prices, and certain types of financing are drying up. Some mortgage brokers are saying everyone's backing out. But the problem with this article is right here where they say, for now, the evidence is largely anecdotal, and that does make sense. This is exactly why I like to focus at the data, because just because a real estate agent's having a bad week doesn't mean another real estate agent isn't having the week of their life. So the data helps us get through kind of all of that noise. So I'm gonna be updating this spreadsheet. Again, the link is for course members, and I'll be updating that. I'll probably do another YouTube video on this in the future as well. But now we have some really important things to talk about: the trajectory of prices, rental prices, and Airbnb, and my expectations. Let's hit that right now. All right, so real estate prices are going to be affected in magnitude by how long this issue lasts. Basically, if this issue comes to an end within the next 2 to 4 weeks, real estate prices are going to stay strong. Real estate prices probably won't see a dramatic impact, mostly because the Federal Reserve lowered interest rates substantially at their discount window, which that kind of uncertainty led the Treasury bond market to plummet, and basically, bottom line, mortgage rates plummeted substantially at the start of this crisis. That actually led to a massive surge in people applying for loans. Unfortunately, because so many people applied for loans, lenders are now also being a little bit more choosy with whom they want to give financing to, and rates have kind of temporarily gone up. But I also expect rates to kind of settle low once lenders catch up with demand. Mortgage interest rates are really important when it comes to real estate because of the rule of 10x. For every 0.5% reduction in rate, like if you go to the bank and go, yo, what are your mortgage rates? And they're like, yo, 4.5% right now. And you're like, what? I thought they were under 4%. Nope, we're too busy right now. We'll give you 4.5%. You're like, no, thank you. And you call back a week later and they're like, yep, we could give you 4% right now, or 3.5%. That's great. Every 0.5% reduction generally leads to a 10x response in prices. So if mortgage rates go down 0.5%, you usually see prices move up 5%. That might be what we actually saw happen in Los Angeles, that quick 5% movement. I mean, all these prices responded very, very quickly as people were locking their rates and solidifying deals with these lower rates. That's good for the real estate market. That also means the opposite could also happen if rates go up, but I don't see rates going up anytime soon, with the exception of this sort of like clearing out the demand pipeline that's like way full right now. Now, just one more example, if rates went from, let's say, 4.5% down to 3.5%, that's an entire 1% drop in mortgage rates. That means you could expect to see a 10% fluctuation in real estate prices. This is mostly because when buyers look at buying real estate, they look at what they could either rent the property out for or what their payments would be, and then align that to what they could rent the property out out for. Because buyers are so payment focused and payment driven, as your payments get lower, your willingness to pay more goes up. Kinda basic, but hopefully the rule of 10x kind of helps you see that a bit. So what about expectations going forward? We have already got rates clear. We think rates are going to stay low. They're going to come back down, especially once this demand kind of dries up from this temporary increase we've seen. But what about other factors? So a big issue that we're seeing right now is a lot of people who have short-term rentals are losing their pants. In fact, I ended up contacting a course member who does a lot of Airbnb work and makes a substantial amount of income from Airbnb. He does an amazing job. And here's a screenshot of his bookings. They're not looking too good. They've fallen off a cliff. Unfortunately, this is screwing a lot of short-term real estate hosts, especially real estate hosts who have either a large mortgage or worse, they don't even own the property. They have to pay rent on somebody else's property because they're doing something known as rent to rent, where you sign a lease with somebody for say $2,500 to rent their house, and then you turn it into an Airbnb and you try to rent it out for say $4,000 or $5,000 a month via Airbnb, and you try to pocket the difference after your expenses. Well, the problem is, if you have to pay $2,500 a month and you're trying to pocket $5,000, that's all fine and dandy if people are using Airbnb. But if Airbnb sales go to zero, you're screwed. So you have two options. You can sell the property, which a lot more people selling means prices are gonna come down, but you can only sell it if you own it. And even most people who currently own aren't thinking of just selling their Airbnbs. Instead, what most of them are doing is they're flooding the rental market during this crisis, where people can't even really go outside right now. As a result, rental prices have gotten slammed. Rents across the country, and this is anecdotal. I'm gonna be clear here, I have not run data on this yet. I'm just seeing this happen because I'm getting ready over the next 2 months to put 4 rentals on the market. This sucks for me. They're just my own properties. This is over $2.5 million of real estate that I'm putting up for rent because they're all under renovation. One of the tenants is vacating and 3 of them are under renovation. And this sucks. It's like the worst timing ever for me. And I'm already tracking rent prices and I'm seeing and kind of watching as people are undercutting each other to get their properties rented. This is going to make it very, very crucial that I continue to use my 360-degree tour technology to give virtual tours of these properties and get these things rented virtually. Probably gonna have to undercut the prices on these to get these things moving fast. Speed is extremely important right now. I'll be releasing some more lectures, by the way, for my do-it-yourself property managers and for the rental renovation section on how to get these properties rented ASAP and some tricks to use beyond just 360 tours and pricing. And remember, if you're not yet a member of these programs where you can join me live 5 times per week to get market updates like this every day and fast, make sure to use the link down below and use that coupon code. It's a really good coupon code. It's gonna get you in, and if you wanna bundle up because you love what you see, you could always email me afterwards and I'll send you a bundle coupon, kevin@meetkevin.com. So we've looked at the pricing data. We've got some Kevin insight into what's happening with rentals and how to deal with it. We know what's going on with Airbnb, but what about the trajectory of the type of properties hitting the market in the future? Are we gonna see more fixers hitting the market, and is this going to crash the market? The answer is potentially. See, during a period of time like this, most home sellers, like regular home sellers who are like, oh, I wanna move to a bigger house, or I wanna downsize, or you know what, I just wanna move to Nevada and stop paying California state income taxes and I wanna get out of here. Most of these sort of discretionary sellers are choosing to delay their sales. These discretionary sellers are usually the kind of people that go in and over-improve their properties. I got a $70,000 maple kitchen, and I've got that Brazilian hardwood floor along with that Italian marble in the bathrooms. Most upgraded property. This is gonna sell for top dollar, and I will not hire a real estate agent unless they tell me I can get top dollar for my property because it's the best. Yeah, those people are not selling right now because they're like, I ain't having sick people coming to my house. I'll just wait until this is all over and then I'll sell. which it's possible that this is going to create sort of 3 to 4 months of pent up seller supply. And I could see a lot of people start kind of flooding these deals on the market later. Fortunately, these renovated deals tend to sell for more, which is a good thing. That's kind of like the principle of getting a wedge deal or a wedge over improved deal. But what kind of sales are going to continue to sell during this time? Well, fixers, properties that have to sell, properties that are hitting the market where people are going, fix and flip, bring your hammer, bring your contractor or whatever, handyman special. Like, these are the kind of deals that are hitting the market right now. And they're hitting the market at a higher ratio than those remodel deals because fixers have to keep selling. If somebody died, the properties have to sell. They're not gonna leave them vacant. They're gonna put them up on the market. California just called all real estate agents an essential service. I believe that also applies nationwide because I think there was something that the Fed issued about that. But check your state's realtor association. I believe real estate agents are now considered essential, which to me sounds like a whole lot of lobbying by the National Association of Realtors, which, in case you did not know, the National Association of Realtors is like the 5th most powerful lobby in the country. They're like up there with the NRA. It's nuts. No wonder they can run all those TV commercials about getting a real realtor. Now let's talk about mortgages. Pretty much everybody getting a non-conventional type of loan has a big risk, or they are getting spanked right now. Like, people getting jumbo loans, like loans that are bigger than the ordinary loan size in your area, like way above the median home price. A lot of these people are getting spanked. They cannot get their loans. They're getting their loans frozen or just completely shut down. I'm actually starting to hear that credit line companies are starting to freeze credit lines. So if you have a home equity line of credit, draw that thing. If, you're gonna be paying interest on the money when you draw it, but at least you have it. That's what I did. They did it in 2008, they're doing it now, so I drew all of my credit lines just so I have the cash sitting around in a little safe spot. So that way if they freeze my credit line, I already got the money. They can't take it back once you draw it. But if you haven't drawn it, they could freeze your credit line. And this stuff is happening. So jumbo borrowers are getting screwed. Non-QM borrowers getting screwed. Credit lines, in some cases, are getting screwed right now. And another big thing that's happening is FHA borrowers are having the requirements to get an FHA loan jacked up through the roof. You used to be able to get an FHA like 3.5% down loan with like a 580 credit score. Like, you could not rent from me, but you could qualify to buy a house, just like insane. Well, anyway, those credit scores are going from like 580 to like 640 and 660 to be able to buy a house now. So they're really starting to tighten the wrenches on all these different forms of financing, with the exception of the one that just keeps staying strong right now: conventional financing. This is where you could put 3, 5, 10, 15, 20% down on a house. You're within normal sort of loan limits, like you're not trying to buy like a big fancy new house, or you're getting a rental property, like you're buying a wedge deal with 20 or 25% down. These loans are still doing okay. I'm not seeing these freeze up. I'm not seeing them have any issues. And I personally think that's because the Federal Reserve has backstopped, basically supported Fannie Mae, Freddie Mac. So those loans are fortunately still happening without almost any fail rate, which is good. All right, now the big one. Are we going to see a massive foreclosure crisis like what we saw in 2008? And are prices substantially going to plummet as a result of that? I personally believe the answer to that is no. Here's exactly why. Number one, forbearance. Right now, it's not the people getting screwed because they had bad loans like ninja loans, no income, no job, no assets, the crappy adjustable rate mortgage loans with balloon payments. Most people today who are getting financing are getting really safe 30-year mortgages, and they're only having issues with paying maybe a month or 2 months of their payments right now because of this outbreak. But Congress has already said that nobody can be foreclosed on because of not making payments during this time, that people have to be given the opportunity for forbearance. This is really good. Evictions are also banned, so everything's pretty much frozen right now, which is totally different from what happened in 2008, where you didn't pay, it was short sale foreclosure. But even in good times, we see 2 to 3% of listings are foreclosures. But ironically, because of this crisis going down, most foreclosure proceedings are frozen, which actually means we should expect to see fewer foreclosures and fewer short sales, even though a lot more people don't have work right now, aren't making their payments. It's like this crazy irony. But no, I don't think there will be a foreclosure crisis, which is crazy to think about. So what does that leave me doing? Well, ever since I made the video, which for some reason YouTube shadow banned, maybe the information was too good. I honestly think it was because the original title I had was, "Did we just hit bottom? My $42,000 bet," because I said bet. And so now it doesn't appear in the search results. It's like, oh, seriously, YouTube? Like, come on. But anyway, in that video, I said I'm officially out there looking for wedge deals again. I made my reasons in that video, but I am not passing up on good deals that are hitting the market now. So if you see a good deal, chase it. Follow the advice in the real estate investing course. Renovate it like I suggest in my property management and do-it-yourself rental renovations course. If you don't yet have the money to do that, join the sales course. Join the psychology of money course. Get money knowledge so that you can actually use this time and do something productive and make money once this sort of stay-at-home period is over. Thanks so much, everybody, for watching. Hope you appreciated this update, and until next time.